The real estate market has officially flipped. Is that true? You see, we put on a house on the market and we got 9 offers. Before I get into the price of what that was, before I answer what were the offers that were made, did they go extremely over list price, were people waiving contingencies? Before I get into all that, I just want to give you an idea of what's been going on. In our real estate brokerage, one of the agents that we work with has had 5 buyers in 1 week reach out to her to start wanting to buy houses. One of the reasons that they're saying is that they're tired of waiting. They're tired of waiting for this market to crash. If you guys are wondering where I'm walking, I'm over by Eagle, Idaho, by Reed Merrill Park, and I'm walking along the Greenbelt. Keep in mind, the Federal Reserve has not signaled that they are going to be doing any Fed fund rate cuts at all, or anytime soon. Maybe one this year instead of by March we're going to have a Fed fund rate cut. But then let's also think about those who have already owned a house. You see in this article, it shows that the home equity line of credit has increased by $11 billion. This is the 7th month increase since the last quarter of 2022. And so there's a total amount of around $360 billion of home equity line of credit that people have taken out. And if it's not a home equity, if they've maxed out the home equity line of credit, then they are going to be sitting around a 10%, maybe higher, because it's a variable rate. So there's $360 billion sitting at a variable rate. Now, I know what some of you guys are saying, some people, not everybody maxed out. Yeah, true, not everybody maxed out, but there are a lot of people that have pulled those out. You add that on top of people that are jumping into the housing market. You had that on top of a potential 40% increase in the housing market. You add that on top of the federal fund, or Jerome Powell has no sign, or he's been signaling that we aren't going to have any kind of price cuts anytime soon. What's that going to do? What's that going to do to the people that are jumping in the market right now versus waiting? Or do you think it's worth it to just jump in and that the economy is going to turn around? And one thing that I really wonder from you guys is, what do you think is going to change with this election coming? Do you think the election is even going to change the housing market? What are your thoughts on it? And the other thing I want to bring up from this article is that credit card and auto loan delinquencies are rising above the pre-pandemic levels. This is a sign that we're all in financial stress. That people are in financial stress, but people are ignoring those signs. Because remember, what are you going to default on first? A home or your auto loan and your credit card? Are you going to default on an RV? Or are you going to default on your house? More than likely, you're going to stop paying on those other items that are not necessities before you start defaulting on a house. Mortgage Bankers Association has stated that the purchase applications have increased 6% from the week prior. But they've also said that we're still 11% lower than we were this time last year. So the question is, are we really going to see the end of this market correction? At least here in Boise, I did have to scratch my head when we listed a house competitively. Matter of fact, we were the highest list price for square footage, for lot size, and yet we got more offers than anybody else who had listed. There were homes, and there still are homes that are very comparable to this one that are sitting on the market. They've been sitting on the market for 21 days, 30 days. And so it makes me wonder, what's going on? What's going on here in the Boise market? And I wonder, is this a trend going throughout the US? You see, in these offers that we got, the very first one we got was about $15,000 under. It was a VA buyer, 100% financing. But the crazy thing to me about that first offer is that if we were to accept that offer, this buyer on a VA loan, they would have to pay around $3,600 a month before taxes, insurance, and because they're a VA buyer, there is no mortgage insurance. But then there are some other offers that were very interesting. The important thing about this is, if you know that there's multiple offers and you see what people are willing to spend or willing to go over or willing to waive, or you see the buyer mentality, this will help you if you're like some of these buyers that are tired of waiting and they're just going to get in the market. This particular house started with $15,000 under, and then it came in full price. We had a couple full price offers. We had one offer that was sitting around $40,000 underneath. But then we had 2 offers that were interesting. One had an escalation clause, and for those of you guys who don't know what escalation clause is, an escalation clause is when you say, hey, I will make this offer, and if somebody has a better offer than what I do, I'm gonna beat it. I'm gonna beat it by $1,000, $5,000, $3,000, $15,000. I haven't seen an escalation clause in probably 2 years. So it was very interesting to me that we saw 2 offers with escalation clauses. Now, the question you might ask is, well, did anybody waive the inspection? Because we saw that in 2020, we saw that in 2021, where people were buying houses waiving the inspection. But on this particular house, nobody waived the inspection. All 9 offers wanted to have an inspection, which is a good thing, again, if you are thinking about getting in the market. But we did see one thing. We saw an appraisal waiver. Again, one of the reasons why home prices shot up so fast in 2020 and 2021 is people were willing to waive appraisals. And for the first time in 2 years, we actually saw one of those come across our desk. And I would think that this is an anomaly, except for one of the agents in our office, like I said, had 4 buyers, it was like 4 or 5 buyers, reach out to her in 1 weekend saying, hey, I'm ready to start looking for a house. I'm ready to go and buy a house. And when we asked the agent to say, hey, can you reach out to your clients and say, what has made the change? Why have you decided to go after this house? Why have you decided to be a buyer in this market? What she said is that they told her, we're tired of waiting. We're tired of waiting for this market to correct, and we don't think things are gonna get better. And so my question is, leave it in the comments below. Are you guys tired? Are you guys tired of waiting, or are you sitting tight? Are you gonna continue to sit tight? One thing that I think is important to bring up is out of all of these offers, there was no cash offers. And we're not talking about a home price in $300,000, $400,000. We're talking about a home that is right around $500,000. Matter of fact, this house was listed at $580,000. And so by the time that they accepted an offer, because there was 3 offers that went over the list price, they fell in between $580,000 and $600,000. Although there were 9 offers on this house, nobody went crazy, $50,000 over, $100,000 over. And that's super important to remember if you're going in and you have an agent that's telling you, oh my gosh, we have multiple offer situation. For instance, an example a while back, we made an offer for a client. We came in underneath the list price. And when we came in underneath the list price, the agent shopped around the offer and put the house in multiple offer situation. Well, my clients took their time, didn't want to just rush into a house, and they said, you know what, this isn't worth it. Like, we're not gonna wait. We're not going to get in this bidding frenzy. And so I ended up seeing that house close, and that house still closed for under list price. I bring this up because it seems like a lot of people are tired of waiting for the market to do its thing and are jumping into the housing market. And if that's you, you just need to be aware of what's going on out there. Now, the scary thing about this, again, going back to the payments, the scary thing about this is I broke down a handful of these offers based on the down payment. There was only 1 offer out of all 9 offers that were gonna put 20% down. The rest of them were putting 5% down, 10% down. So they have mortgage insurance and more. One of the offers was putting $29,000 down out of a purchase price of $580,000. So based off of their loan, their monthly payment was gonna be $4,000 a month. Again, you gotta keep in mind, in the Boise area, the median household income is sitting right around $75,000 to $82,000 a year. That's the median household income. If you have a monthly payment of $4,000, how much of that is gonna go towards living expenses? How much now is $4,000 a month based on a 6% interest rate? Now, there was another offer, but let's say that offer and they weren't able to buy down the interest rate to 6%. If that interest rate was 7%, that mortgage now jumps from $4,000 a month to $4,300 a month. Again, this is insane. This is insane that people would be paying this kind of much money for a 2,000 square foot house. And again, I had to scratch my head on why did we have all these offers? But the other thing I want to bring up is we listed a house a week prior, and that house a week prior had multiple offers on it, again, under $600,000. But it's important to realize not every house is gonna have a situation where there's gonna be multiple offers. And is it just $600,000 and under that's going crazy like this? Is it every single house that's going crazy like this? I would bet that no, it's not every single one of these houses. But I will say that at least here in the Treasure Valley, buyers are tired of waiting. And if you're tired of waiting, you really just have to be careful. You don't want to fall suspect to buying a house and the market continues to decline. But I also want to bring up what some of these builders are doing, because again, it's important to know this so that you can use it. We had a client who reached out to us and they wanted to be with a specific builder, or they want to be at a specific price range. And so what we ended up doing, or what I encouraged our agent to do, is reach out to the builder and say, hey, this house is selling for less. This builder's offering these concessions, will you do it? That builder took 4% off their list price. Now, is 4% still too much? I don't know. Is that 4% not enough? I don't know. But for this client, they were happy with it. They were gonna be taking their equity from selling a house and moving to this. But that brings up another point, that this client was able to get a contingent offer accepted on a house. Now, what is a contingent offer? Contingent offer means I have to sell a house first, get my funds in order to close on your house. And again, there was a time where contingent offers were not something that people would accept. But in this particular moment, they are. Builders are willing to take contingent offers and come down on list price. So I got a question for you guys. Would you guys buy this house and have a $4,000 a month payment? Or do you think it's crazy? Because this is just Boise and there's not a lot of things going on here in Boise. According to Altos Research, they're expecting that the housing market inventory is going to grow by 40%. And if the housing market increases by 40%, is there enough buyers to eat up that cost to keep the market competitive? Something you got to keep in mind is people were expecting the Feds to drop their rates. And the big risk that I have is, the big risk that I want to bring up is back in 2022, 2021, when we started sounding the alarm, people were getting the 3-2-1s buy downs. They were getting the 2-1 buy downs with the expectation that the Fed would have already dropped their rate. And right now we're in 2024. So we have a plethora of homes, a plethora of people who bought with a 2-1 buy down, a 3-2-1 buy down with the expectation of refinancing, and now they can't refinance. And the interest rates are still at 7%, 6.5%, depending on how many points you want to buy down. And the Federal Reserve has no sign of dropping rates. Again, we were expected to be in the Fed fund rate is expected to be in the 4s, 4.5, and we're still sitting at 5.25. The Mortgage Bankers Association article does say that the refinances have kicked up 12%, but they can't kick up any more than that because the interest rates are still so high. And these people who bought a 2-1 buy down, now they're getting their full payment. Because keep in mind, if somebody got a 3-2-1 buy down or a 2-1 buy down at a 7% interest rate, when they jump from a 6% to a 7% payment, that payment can jump $300 possibly. And so when somebody got locked in and said, okay, I'm gonna have my payment be $3,300, now they got to jump and they're paying $3,600 that they were expecting that they could refinance and drop that payment, but now they're gonna be stuck with that higher payment. And how long can they hold on to that? How long can they hold on to that payment before they get themselves in trouble, before they have to sell a house or there's a forced sell? Because loan delinquencies have continued to rise. Let's talk about this Housing Wire article where it says that right now there's over 500,000 single family homes currently on the market. That's up 0.5% from a week ago, but it's up 21% compared to a year ago. And there are more than 100,000 single family homes on the market than there were last year. And unless mortgage rates fall here by July, they think that there's going to be around 40% more homes hitting the market than a year ago. So if 20% is sitting at 100,000 and 40% by July, we could possibly see around 200,000 homes hitting the market. You see, everybody's been crying supply versus demand. We don't have enough supply. People are going to be married to their interest rate because of how low it is. But right now, something else that this article brings up, one of their leading indicators about where the future of home prices is going is price cuts. And right now they're saying that 30% of the homes on the market took a price cut, a normal level for the time, and it's basically unchanged from a week ago. Last year, there was still a lot more buyer momentum than sellers. This buyer momentum at the time led to 5% price appreciation. And we could see it already. With inventory up and demand continuing to fall, there's gonna be a significant less upward pressure on home prices than it was a year ago. And so I'm curious, where do you think home prices are going? And are you seeing multiple offers? If you're in the real estate industry, have you seen multiple offers? Have you heard from agents saying that there's multiple offers? And then one question that I want to know is, Are these multiple offers waiving inspections, waiving appraisals? Or is this just a small blip of home buyers running into the market and then it's gonna cool off again? Is this a small blip because spring season has come upon us and the people who have been waiting are jumping and being impatient? And do you think they should be patient? Or do you think it's smart for them to jump in?